Hi, this is Ferre and Steve Swenson with Tax Sale Secrets here with the weekly update for March 23rd, 2018.
Yes, absolutely. We love doing these every week and giving you guys the opportunity to talk about and us talk about different tips and go over upcoming auctions. And it's just a good way to connect to our members and our YouTube followers.
Yeah, we like to get information out regularly, and it's a good chance to talk about announcements and also sales that are coming up, hot lists, you could say. And for this week's tax sale tip, we're actually going to talk about the quick glance method. That's actually wrong. So let's just talk for a second here. We actually have an upcoming online workshop. It's our Saturday morning workshop that we do. It's going to be on April 14th at 10 a.m. Mountain Standard Time, and that's something that anybody can attend if anybody's interested in doing that.
Yeah, absolutely. Down in the description section, we'll have a link that you can click on that'll allow you to register for it. And we only have 100 spots, so we usually fill them up. So if you're interested, definitely sign up.
Yeah. In fact, they do fill up. So get registered for that as soon as you can. Also, if you want to become a member, you can do that for just $29 a month at taxsalesupport.com. You can get more information there, or you can use links down in the description. And if you don't have a free ebook yet, you're welcome to go to secretsoftaxlieninvesting.com and download one.
Yeah, exactly. All of the links will be included below. Now, as far as the auctions coming up over next week, there's quite a few good sales. On the 26th, there's going to be an online auction happening in Santa Rosa, Florida, Kern County, California, and Elmer City, New Jersey. On the 27th, Lake Florida is going to have a good online auction. Usually there's a lot of good properties there. Hopewell, New Jersey. And then there's going to be a live sale happening in Shelby County, Tennessee. So for any of those investors in Tennessee, that's a good opportunity to attend a live sale. On the 28th, we have Douglas County, Nevada, Martin County, Florida, and both of those will be held at the county courthouse. And then Pemberton, New Jersey will be held online using Real Auction. Then on the 29th, Orange County, Florida will be having an online sale. And then there's a couple of live sales happening in Chemung County, New York, and Hendry County, Indiana. On the 30th, it's a pretty slow day. The only auction that's going to be taking place on the 30th is Cochise County, Arizona, and that is going to be an actual tax deed sale. Arizona is mostly known for liens, but if the county has a bunch of deeds that they have on the records, they'll go ahead and foreclose on them and offer them up on the sale. And then starting the month of April, there's actually going to be a ton of awesome auctions happening in April. Pierce County, Washington is going to have an online sale. Shelby County, Alabama has a live sale taking place, and Boone County, Missouri has a live sale taking place. So there's going to be auctions happening in Missouri, Alabama, Arkansas, Washington, California, Florida, New Jersey, all next month. So there's going to be a ton of opportunity.
Yeah, and lots of different ways that people can get involved and basically bid or purchase tax liens and deeds. So it's definitely a good time to get involved. For this week's tax sale tip, we're going to talk about what we call the quick glance method. This is a term that we came up with a while ago that we thought just kind of described the process that we go through.
20 years ago, probably.
Yeah, seriously, probably was 15 years ago when we came up with it, but it describes the process that we go through when we're looking at a tax sale list, specifically the larger lists. The larger a list is, the more important it is to be able to do this, and it's really the way that we whittle down a list to the properties we're most interested in.
Yeah, especially when we're talking about, actually downloading a list. So we're not talking about an online auction or a live list. We're talking about where you're actually downloading the Excel file or the PDF file, and you've got to go through that list and find the good properties.
Yeah, which, that's a challenge for a lot of people. It's somewhere that people tend to get lost because it's a big task. You've got this list with several hundred liens or deeds on it, and you're trying to figure out what to invest in. It's a little bit overwhelming. The quick glance method is a good way to narrow that down to a more manageable number, something that you can effectively attack with your time.
Yeah, exactly. Essentially, the quick glance method is really just a process of selecting tax liens or tax deeds that fit a certain criteria. and then just disregarding the rest. So you're not going to spend a ton of time researching tax liens or deeds that don't fit your objective. You're going to focus on that list on the information that's available on liens and deeds that fit what you're looking for.
Yeah, in fact, the quick glance method really is about common sense. It's just common sense, really. But what we want to do is use what information we have available to try to distinguish between liens or deeds that are going to work for us versus those that don't. For instance, if there are liens or deeds that are priced above your price range, then obviously they're not going to work as investments, and it's easy to disregard all of those that are priced above what you want to spend. But in some cases, there might be some that are priced below what you want to spend as well. Price can be a powerful factor when you're trying to separate these. The idea behind that is essentially to use whatever information is available on the list to try to narrow down which of those are going to work for you and which ones won't.
Yeah, exactly. And this process, it can be repeated multiple times. And so as you're going through that list, you'll be narrowing down that list, and you may continue to narrow down that list until you are able to essentially research the properties or put together a list of the properties that fit exactly what you're looking for.
Yeah, so to begin doing this, the first step is to use the information that's available on the list, one of these categories preferably. And most lists will have at least one of these things on the list. The first is the minimum bid amount, which is usually included on the list, or the amount due.
99% of lists will have the minimum bid amount.
Yeah. Then also, if you can find if they have the assessed value on it, or if they have a physical address, those can also be really good factors sometimes, because they tell us quite a bit about the property, just those two bits of information.
Yeah, because we're limited in time, we're going to talk about these three, but there's other things that could be on the list, like zoning information, or if there's structure information or structure value. And so all of that information, if there's additional information on the list, we're going to use that information as well, as we're essentially scanning down the list looking for properties based on their minimum bid amount, like Shade said. If they have assessed value, if they have an address, that way we can kind of narrow down those properties. Like a property with an address is obviously more likely to be either a structured property or a building lot that has already been given an address within a subdivision.
Yeah, which is an easy way to target properties that have an actual address versus those that you don't. If you were looking at the list, you might find that only a third of them actually have addresses, or a quarter of them. It's a really easy way to kind of disregard the rest of them and to focus in on those that do. If you've got an assessed value and a minimum bid, you can see what the bid to value ratio is, which is also a good quick way to be able to evaluate a lien at a glance.
Yeah, and if there's structures on the property and you're looking primarily for land, then you can eliminate those structures. So the first one is, and probably the one that we check out the most, is going to be the minimum bid amount. Essentially, the minimum bid is a reflection of the property's value.
Yeah.
And so that's the reason why it's the first thing we're going to look at, is because that's how much we're going to have to either pay for the tax lien, or that's going to be the opening bid or the over-the-counter amount for the tax deed. And the obvious reason is your budget. You don't want to, like Shade mentioned a little bit earlier, you don't want to spend time looking at tax liens that are, or tax deeds that are over your amount. So if your budget is between $5,000 to $10,000, then you're not going to look at any tax deeds that go above $10,000, because those are out of your price range.
Yeah, in fact, it's a really easy way to avoid those. We simply ignore those that are above the price range. But also, like Steve was saying, the amount owed, the minimum bid, is a reflection of property value, and so you can almost tell, just based on the minimum bid alone, what the properties are valued at, even if it doesn't give you an assessed value on the list. Just by the minimum bid alone, you can kind of get an idea what the value is, because most of those with minimum bids are going to have similar values. As long as the minimum bid is similar, oftentimes the property value is similar too.
Yeah, it's a good point. As you start going down the tax sale list, you'll be able to determine, what that minimum bid amount is, and if it's above or below what you're looking for.
Yeah.
And so this here's just an example of a list. You can see, there's a bunch of information on this list. We have the owner's name, the parcel number, legal description, but there we have the tax amount, or the minimum bid amount. So with this particular list, we can see the amount that is going to be the opening bid amount for the tax sale property.
Yeah, and so With these, having all this information here, there's a number of things that we could choose from, but the first thing we're going to use is going to be the price to basically narrow down those that we're interested in versus those that we're not. Now, we may decide that if we're buying, let's say, tax liens, we have a budget, we don't want to spend over $10,000. Well, we know we're going to eliminate those over $10,000, but we may decide we want to eliminate those that are below $500 or a certain amount.
$1,000.
Yeah, $1,000, because we want to stick to properties that have significant value. And maybe once we move over the $1,000 mark, the properties have a value that we're more comfortable with. So we may set the parameters there for the liens that are between $1,000 and $10,000, and use that as one of the first ways to begin to narrow down this list of properties. Even just that step alone, good chance it will narrow down a good chunk of the properties, at least half.
Yeah, definitely.
The assessed value is another one. If they provide the assessed value on a list, that just makes it easy, because the assessed value is such an important part of what we're looking for here. We can basically separate properties based on value alone if we want.
Yeah, if we have the bid amount and the assessed value, then what we can do is we can look at that bid amount versus the assessed value. That's what we call the bid to value ratio. And so we'll go ahead and look at that, and as we scan the list, we'll be able to see which ones have a good bid to value ratio. Now, essentially, the assessed value is the value that the county has placed on the property in relation to the property taxes.
Yeah.
So that doesn't necessarily mean that that's what the actual value of the property is, but it does give us a pretty good indication of probably what pretty close the property value is.
Yeah, generally people won't pay too much for taxes. They don't want to. They'll throw a fit. So if their property is assessed at a price that they think is too high, then they begin throwing a fit about that. So assessors are pretty good about pricing it just under market value, but having a little bit of cushion there. So depending on where you're at, that can vary somewhat. But either way, the assessed value is at least close enough within 10 or 15% most of the time, and that's as close as we really need when we're at this stage of the due diligence process, because we're simply trying to figure out what we might be interested in rather than what we're definitely buying.
Yeah, exactly.
So here's an example of the assessed value on a list, and they've got this one a little bit different, where you've got the minimum bid a little further in, but we can use the assessed value really just as easily here to distinguish between those that we're interested in and those that we aren't. We might decide we're not interested in anything with an assessed value below $2,000 or below a certain amount, and we'll find that those are above amount maybe have higher prices.
Yeah, exactly. And with this list, you can see the assessed value, the minimum bid, and you can also see the property location there, so we can see, does that property have an address or not?
Yeah, in fact, you can see some of these where they have an address that's like 0 Vance Street.
Yeah,
or
and
0.
most likely that's going to be something like a piece of land versus a home.
Mm-hmm. Yeah, that's a good way to locate, raw land versus properties that have improvements on them. Oftentimes a physical address will be given to different properties, residential properties with some kind of a structure on them. In some cases, it might just be a building lot, but a property address is a pretty easy way to distinguish between different types of properties.
Yeah, exactly. That address can automatically give you the ability to Zillow the property if it's a structured property. Google the property if it's a structured property. Zillow the property. It automatically makes it easy to find the property. Of course, we're still going to want to check the county maps and all of the things that we'll do as we start researching the property, but that address is an automatic indication of where the property is located, and we can quickly find out any additional information on the property.
In fact, what's nice today is with the internet and so many of the tools that are available, we can copy and paste a property address into something like Google Earth or Google Maps and pull up the property within a few seconds. So it's something that we do all the time when we're looking at properties, and a physical address is always an easy way to make that happen. This is actually an example of some of the online lists that we see and use sometimes in real auction.
Yeah, it's actually what I was going to mention. I said at the beginning that this was for mostly hard list, Excel list or PDF list, but you can use the same strategy, and we do, is we're viewing an online list. So this here's an example of an online list for an upcoming auction in Florida. But as we're scanning down this list, we can not only see the opening bid amount, we can see the property address, and we can see the assessed value. So that first property, $11,000 opening bid, $180,000 assessed value with the property address, most likely that's something like a home or a structured property. And so automatically we can see what the bid to value ratio is, we can see the address, and just by looking at that, we have a pretty good idea of what the property could be.
Yeah, in fact, we can already see just based on that alone, that it's going to open up at 11,500, but based on the assessed value, it has a bid to value ratio that's probably somewhere near 5%. Just looking at it off of a guess, which is incredible. That's really an excellent bid to value ratio. If you can find it anywhere, I mean, we talk about 10% being a good number, 5% is even better, and it's amazing how much information we can get from that without clicking on anything. If we want more information, we can click on these links to pull up actual county property records, but just off of a glance, we can see what the bid to value ratio is. We can tell pretty much that it's going to be a home, or it could be something like a commercial property, I suppose, if we were to click on it, but chances are it's probably going to be a home, and it's got significant value. A lot of stuff we can learn without taking a whole lot of time.
Yeah, even the property below that with the $9,500 opening bid, just under $18,000 assessed value, looking in that property, I would guess that it's most likely some type of nice residential lot.
Yeah.
And looking at the price, that's still about 10 cents on the dollar as far as that investment. And so if we were interested in the land, we may click on that particular property.
Yeah, absolutely. So the idea behind this is basically to take the information that the county's provided to you and to find the fastest way to break that down using stuff like the value or the taxes due, and basically use that information to try to narrow that list to something that's more manageable, and to also hone in on those properties that will work for you versus those that won't.
Yeah, really the quick glance method is going to save you a huge amount of time. And it's something that's going to take a little bit of practice and kind of get a feel as you start scanning down those lists and picking out the different information that's important within the list that could give you clues if that's going to be a good property that you want to research. And so that's one of the biggest things, is it's going to save you a huge amount of time. When we get an Excel list, if we are narrowing down that list, then we'll actually erase any of the tax liens or deeds that we're not interested in. So we narrow down that list to even a smaller number of potential investments. And that's really what this this quick glance method does, is it's going to save you a huge amount of time.
Yeah, and time really is probably your most valuable resource. In the beginning, you're just trying to figure out how to get started and what to do. But the more you learn, the more you're going to realize that wasting a lot of time on stuff is the enemy. What you want to do is work as efficiently as possible so that you can be effective with what you do. And the quick glance method is a way to make you more effective, to help you get to the buying part of it, and rather than getting lost in trying to figure out which properties you're interested in.
Yeah, exactly. Once you've narrowed down that list, you can essentially start researching those properties in the county records and start evaluating each one of them.
Yeah, that's where your real due diligence will start to come in, is once you've got a smaller, more manageable number of properties that you're interested in, and that you can actually perform real due diligence on.
Yeah, and this strategy really helps if you have a large list. So if there's 5 properties on the list, it's not a big deal. But if there's 200 or 300 properties on the list, or 3,000 properties on the list, that can make a huge difference.
Yeah, it really does. It really does. Well, we'll continue to produce these weekly updates. If you want more information, you can always check it out on any of our websites, taxsalesupport.com or secretsoftaxlieninvesting.com.
Absolutely, and don't forget to subscribe. And if you enjoy these, go ahead and give us a like. We definitely appreciate it.
We'll see you next week.